in the community. You can see here, average per person contribute about 150K per year. Total contribution to date, this number is already outdated. We have done more than 60 million, and we have 2 lines of business. Later on, I can explain. So between the 2 line business, we've done over 100 million. Highest contribution by a single contributor is 1.78 million. And we have, this number is also outdated. We have successfully exited so far more than 400 projects, okay? If there's no question, I'll keep going. So we primarily offer 3 modes. One is education training. Things that we explain to you today and through our other educational series, typically it will cost you a couple $1,000s if you go to like Real Estate Academy, etc. We provide it all for free, all right? Not that many people do that in this market. Also, we do guided contribution. So what happens is that there's a small percentage of our community that's really experienced investors who they do not need, who they can operate the asset themselves. They have construction team, they know how to get permit, they know architecture, etc. They know how to evict people, etc. So they buy projects from us. Now the last one, passive contribution, which is passive income, is where we handle everything from beginning to end. You don't have to step out of your house. You can just sign documents and enjoy a really high passive return without even doing anything. So most of our clients in our community choose the passive model with that. So we take care of everything and you don't have to worry about a thing, all right? Okay, I think it's worth time to talk about who we are a little bit so you understand. We are actually full-time real estate investors. We are all full-time. We all make our living by investing in real estate. We all made our first million in real estate doing exactly the 6 products that you're gonna see. And we also invest into the same deals and projects that you see that we share with you on the exact same terms. So, and we have invested millions alongside with our community as well. We are actually one of the biggest investor in our community on the project that you see. So this is who we are. We really put money where our mouth is, okay? So before we get into conversion today, I just want to give you a high level idea as to the 6 products that we do. Private lending, make legal lending, conversion, multifamily, flipping. Now, even though it's 6 products, what I want to point out is that it's 2 categories of products. 2 categories of products, okay? On the left side, it's all debt products. You, for amount of money you're lending to people for 12 months or so, you are getting back fixed rate of return, so 8 to 13% in private lending, or 8% or 9% in MIC, or 10% in legal lending. You know exactly the amount you put out, and you know exactly how much you are getting monthly or prepaid upfront, and it's under 12 months, you are getting the fixed rate of return. On here, on the right-hand side, these are 3 products, which is equity product. Means it's longer term, returns are slightly higher when you exit years later, when you average out per year. So on the debt side, the first 3 products, you're getting average about 10%, so 8 to 13% a year, so about 10%. On the equity side, you're the target for return is 15%. Okay, the target for return is 15%. All right. Now, what's the difference? The difference is, one is the targeted return. As you can see, on the debt side, you are getting great return, fixed, under 12 months. On the equity side, you're getting higher return, but the term is higher, so you're looking at 5 years or longer. By the way, these are all targeted annual return, and target annual return is higher, 15% plus. And here on the debt side, you are the lender. On the equity side, you are the owner. You actually own the assets and enjoying the appreciation, right? So today we're talking about conversion. Conversion is part of not lending, but part of the equity product. Okay, so you are the owner. All right. If no questions, I'm gonna jump ahead on what is conversion. Any questions so far? All right, if there's no questions, I'm just gonna continue. What is conversion? So let me tell you how we came about to develop this project or this product. We start with lending, and a lot of people. We start with lending. A lot of people. We start with lending where a lot of people earn fixed income. They're like, okay, you know what? I signed paper. I got 10% return, 11% return, 9% return. I keep collecting checks every month. I don't have to do anything. Great. But I have more money. How can I diversify? What I want to earn in addition to just like straight interest or cash flow, I also want to take advantage of the capital appreciation. I want to take advantage of real estate appreciation. I want to be able to hold assets. But where in Toronto can you hold real estate assets with positive cash flow? It's almost impossible, right? Obviously, we're talking about as close to GTA as possible with good appreciation potential. That's how we have developed conversion model. Okay, so what is conversion? So it's a new way we developed that we can hold assets with positive cash flow for long term. Intention is to maintain relatively flat cash flow or a slightly positive cash flow, while you can easily hold assets in areas that you like with long-term forced appreciation. Okay, so not only you can enjoy cash flow, you can also enjoy real estate appreciation. All right. So how we do it? What we do is we buy single family detached house which fits the criteria that can be converted into legal duplex, triplex, or secondary suites. All right. The construction takes usually about 6 months to a year for standard conversion process. Our record was we did it under 2 months for a very smooth one, but also I've heard on the market that other people did it for maybe over a year. It all depends on, did you buy right? Did you convert right? All of that stuff, okay? Now, the participants will apply for mortgage, and we will handle everything, including asset acquisition, due diligence, construction, refinance, property management, all the way until you exit. Any questions here? If not, I will continue. Okay, what is the driving force behind conversion? I don't know if you guys have heard of Bill 140, which is the Strong Communities Through Affordable Housing Act 2011 provincial bill. Okay, this is to solve the density problem in Toronto. However, the really interesting stuff is this doesn't mean every municipality is compliant. All right, so you really have to know which one allows, for example, secondary suites and under what criteria, and which pockets that don't allow that, and you don't want to buy into those areas, okay? So why choose conversion and what is the advantage? A lot of people say, hey, I rent out my basement. Like, why do I have to convert it to legal status? Okay, so we are all long-term real estate investors. We do it for a living. We are not doing it like maybe one house every 10 years. We're doing, continuously. Therefore, risk mitigation is key. If you are also not a one-off investor, you should remove the risk of anybody calling the city and shut you down, because that happens all the time when you just rent out your basement, all right? So if you do conversion and get the staff certificate, one is safety. Because you legally converted everything, then you're not into the risk of getting sued easily. You're not getting the risk of getting fined or shut down. All of a sudden, you can charge higher rent. You have reduced risk. When you apply for mortgages, it's also better to apply with a certificate, and also obviously comfort of living for your tenants. You can get a higher resale price. Typically, guess what's the premium for legal suites, for house with a legal suites status? Do you guys have any idea as to what premium you can get compared to comparable sales in the neighborhood? And then in addition to quality tenants and don't have to worry about complaints. Anybody take a guess? All I can tell you is the sale price will be higher if it's not converted. Does anybody have a guess as to how much or what's the percentage of premium? Do we have any answer?
Hi, Cindy. I haven't received any answer yet.
Okay.
Let's wait 1 more minute, maybe.
Okay. 5 seconds, and then I'll tell you. 1, 2, 3, 4, 5. Okay. It's about 15 to 20% premium. Okay. Think about that. That's your resale price. Okay. Any questions so far? I'm now going to talk about where. All right. So we typically do in 3 areas. If you can see, okay, I'm gonna show you this picture first. On here, you will see the map. You can see the color indicates population. So Toronto downtown is right in the middle, right? On one hand is Lake of Ontario. On one hand is Lake of Ontario. On the other hand is the I don't know if you guys can see it. Well, I'm pretty sure you can see the green land. That's the biggest green belt in the world. All right. So that's why population, the land is limited. Population is stuck in the middle, and everybody knows downtown is pretty saturated. So where do people go? The spillover effects. On the east, you will go to Durham. On the west, go to Hamilton, right? To those 2 directions. So we have been heavily doing conversions in Durham and in Hamilton. So right now, Hamilton's already been up. So sometimes the return is not as high as what we hope for. So right now we even do that in Brantford. Now, we also do conversion in downtown. Let me go back here. In downtown, if you can see Toronto downtown. However, it requires a larger cash up front. It's very defensive, like little Italy, little Portugal, even in COVID-19, like you don't really get distressed property out there. It's super defensive. However, the cash upfront you need to do a conversion project in downtown, which most likely will convert a duplex into triplex, is between 700 to 1 mil. Not a lot of our clients do that. We mostly go to Durham and do a smaller single detached house conversion because the cash required upfront is a lot less. You're looking at under 300K. So if you have like under 300K and you have mortgage qualification for a $500,000 house, you are in the game. All right. So in Durham, that's where we do a lot, and that's where our clients do a lot as well. Any questions here regarding where we focus on and the cash required and the qualification criteria? Okay, if not, I will move. Okay, so this one is one of our, I guess, strategy or our philosophy, because we never want to invest in areas which is like right in the middle of everyone's bidding. Like it's so hot, there's no forced appreciation or there's no forced value to add. We always want to invest in the area where it's the next one. It's upcoming, but it's not there yet. Therefore, we have a lot of room to play with. And that's why we pick Durham, because from price to risk ratio and from the starting point, you can still get house that's convertible around the $500,000 mark, and out of all that, it's the closest to Toronto. All right, so the overall fits. Now we've already seen this one. Just very briefly about Durham, it's a group of satellite cities. I don't know if you guys have been there or take the GO train, whatever. there are quite a few large GO train stations. It takes only about 15 to 30 minutes ride away from Toronto. Population growth is significant. There are a few highlights there. A lot of people talking about the nuclear plant. So I don't know if you guys know, but actually the internal documents from the government showed that the shutdown is already confirmed to be 2024, and the clear of all waste is at the 2028. So before the news broke out, before the news broke out, even in last year, 2019, September, prices in Durham really started to pick up. And before, I actually find myself not bidding against many people, maybe just home, like end user, like home buyers. But even starting in 2019 September, I started finding that I bid against a lot of Toronto investors because they found this spot as well. So I anticipate Durham probably has another 12 to 24 month window before we have to move further. All right. So we talk about nuclear. Also, the Pickering is seeing planning of community to accommodate more than 70 additional people. Also, the casino there, it's not a proposal, it's already broken grounds, and before COVID, they actually started the casino operation and hiring. The planned positions to be filled is 30,000 people. You times 2 or 3, you're looking at close to 100,000 net new additional people in the area, and that's going to drive the housing demand as well. All right. And there's a bunch of other stuff which you guys can see here. A very important thing is transportation. GO Station 407 is also extending. Now, I want to bring your attention to the purple here. I'll tell you a little bit the really interesting stuff. We started investing in Pickering, it went up, Ajax went up, WeBe went up, now we're in Oshawa. A lot of local investors have picked up in Bowmanville. All right, as you can see, this is an up. So we picked it as an upcoming area, but as we predicted, people also noticed this. So you know, a lot more and more investors are moving here. All right, just another side story. The conversion we bought in November 2019, the next door sold more than 40,000 for more than 40,000 in March, towards the end of April during COVID-19. Okay, and even when we're buying conversion in Oshawa right now, there's bidding wars. Just so you know, that's what we see on the front line. Any questions here? Okay, if not, I will move on. The key thing here, our strategy is always very core, which is we never speculate. We always invest in what has the most local demands, which is houses around 500,000 mark in the areas that are growing fast. All right. Okay, if there's no more questions, I'll move on to the business model.
Yeah, Cindy, please go ahead.
Yeah, if I don't know if you guys know how we do multifamily. It's or how we buy buildings and reposition them and turn around and increase cash flow. Same thing here. Okay, so we purchase. So we have to find a convertible single detached house in, for example, in Oshawa, in a good area. Out of everything that comes our way, maybe 1 out of 10 is convertible. So you really have to know what to look for. And then we go through the wholesale process or purchase process. We get the property, then we get the permit, we renovate, we design, obtain permits. We design, we obtain permits, and we do the construction. One sec, okay. Then we do the construction, and we finish renovation. To us, typically we do it between 3 to 6 months. Once you're done, then you have the legal status to rent out both upper and lower suites to separate families. Therefore, you transfer this asset either into duplex or triplex. That's more for downtown. Rent. Okay, So once it's done, because I'll show you the pictures later on, so you will understand why we have positive cash flow. Once it's done, you can command a lot higher rent than typically in the neighborhood, so that you can rent to qualified renters in legally separate suites. Later on, when you see the numbers and when you see the example, you understand how that works. And then once it's done, you go to the bank, reprice the property, and refinance. And you take most of your construction money out, and you put the money towards another purchase, and you just repeat. By doing this, what you have done is you have increased the value of your asset, you have increased the cash flow of your asset, you have increased your ROI of your asset, and you keep getting the money out and repeat. Any question here? If you don't understand, you understand more when we see the picture and when we see the financials. Okay, 20 years legacy plan. This is how we all started. We all end up just from one initial investment property, and we keep creating value for it, forcing the appreciation for it, taking money out, and then keep buying another one and repeat the exact same process. And then we have built a massive cash flow portfolio plus equity portfolio. That's essentially how every single one of us have done it. It's all born from that one initial investment. All right. Okay, if there's no questions, I'm gonna move on and talk about, okay, what do you look for when you acquire assets for conversion? You have to check the building code, the fire code, electrical, everything. Municipal bylaws, you have to make sure that it doesn't conflict with the provincial codes. Also, specific asset, you have to look at the zoning, the parking, ceiling height, square footage, egress, etc. All of that you have to consider whether it's convertible or not. Design-wise, you have to really communicate with your architect, figure out acoustic, heating, cooling, plumbing, adequacy, and dry living space, etc. All right. Now, the process of creating illegal suites, very simple. Overall, so it's actually funny. We have a lot of clients which we manage everything for them, and sometimes they're like, "Oh, this looks really interesting, and it looks so easy. So I'll buy a project from you, and I will do it myself." And then after half a year, they come back and say, "Oh my God, this is so hard." So the process looks very simple on the surface. It's all the nitty-gritty details that will get people crazy. Okay, you make sure the bylaw and the code compliance check, right? And then you have to submit your permit application, like the floor plan, elevation section details, etc. You go back and forth with the city. Hopefully you get the permits. Then you do the construction. You get the inspection out. You get the final approval. Then you rent. Then you refinance. Repeat the process, etc. So on the surface, it's actually pretty easy. Now, this is a very high level reason why people do conversions. Later on, I'm going to show you detailed model on detailed numbers, okay? Here, if you see the purchase price 440, by the way, the 440 is a couple years ago. There's no way you can get 440 in a desirable neighborhood right now for conversion, except for Brantford. Oshawa is definitely around the $500,000 mark. All right, now on the left side, if you are having a single family here, your down payment is this much, your rent is this much, and your mortgage, your cash flow is $19 and your value, okay? Make sense? Here, if you convert it, purchase price this much, down payment this much, you spend, say, $60,000 renovation dollars, okay? Your rent is higher, you refi your mortgage because your appraised value is higher, okay? Your cash flow, instead of $19, it becomes $418. Your property value has become 525 plus. Your forecast ROI is between 15% to 25%, much higher than here. But when you refinance, you took most of the 60,000 back from the bank. Therefore, it means in here you have 88,000 in the house. In here, you probably have like 88 or 98,000 in the house. But your cash flow is a lot higher. Your property value is a lot higher, and your ROI is a lot higher. So a lot of people, once they see this slide, they're like, instead of asking why do conversion, they're asking why not do conversion, right? Because you're essentially with the same amount of money, you bought something that's much more expensive, much bigger, and much better with the same amount of money. All right? Any questions here? If not, I will move on to more details on real stats. This we just talked about. The first refinance allows you to get most of your construction money back. So your cash flow goes up, your natural appreciation goes up because your house value has gone up, and your resale value, as I said, is typically 15 or 20% higher premium than your neighbors. Okay. Now, this is a standard that you should, at least we try to make our conversion product. So we tend to use economical and durable material, and we want to use the bang for the buck on the area that will give us the most return, which is kitchen, bathroom, floors, and paint, right? Now, give you a real case example here. This is interesting. So we typically buy three bedroom house and convert them into 3+2, means 3 bedroom upstairs and 2 bedroom downstairs. We got super lucky in this project where we actually bought a 3 bedroom house, but we convert that into 8 bedroom, 4+4 instead of 3+2. Okay, 4 bedroom upstairs and 4 bedroom downstairs. Okay. Sorry, here's wrong. It's not 2 baths. It should be 2 baths. All right, Shirley. Okay. This one has 6 parking space and 1 indoor garage rentable. All right. Private backyards on good street in a neighborhood to separate. We separate the meters. We separate the pretty much everything that we can for upper and lower tenants, and close to schools, major transit, and highways. Okay. This project is a full got. Everything was got it. All right. And this is after. This is, we probably set a record in the neighborhood in Oshawa for this one. All right. And this way we actually finished under 3 months, close to 2 months. So, and this is actually during COVID-19. So very interesting. All right. Any questions so far before I actually go into the actual numbers?
Cindy, I would suggest we give 1 minute waiting period so people can just comment.
Okay. I'm gonna talk about a real deal here. So while we're waiting, if there's any questions, people can read what this deal is, and then I will go into the details of the Excel. All right?
Yeah.
So this we actually sent out before as well. I don't know if people seen it, but I thought using a real deal will illustrate better to help people understand.
Cindy, I think you can start.
Okay, so this deal is another one in Oshawa. It's 3 bed, 2 bath bungalow, good neighborhood. Lot size is 57,103. Okay, acquisition price is about 490. I think that this was last month. I think this month should be even up from here because we watch the market very closely. It's very popular. Okay. This does not need a full gut as how the other one was like. So after renovation, the after repair value, reappraised value, based on our experience, should be around 600 to 630, and you're looking at probably 3,200 monthly rental income. All right. As we said, typically conversion will be done between 6 to 12 months. At this point, based on our experience, the construction is not going to be impacted by COVID-19 anymore. All right. Our model, 2 options to participate. One is the passive income model where you qualify for mortgages and we manage everything from beginning to end. This one, you will see the exact number afterwards, but it hits our targeted minimum return, which is 15% per year upon 5-year exit. And the other option is that you buy from us. Once you buy from us, we don't manage anything. You do everything yourself, and your expected ROI after 5-year exit is about 25%, which is what we try to target hit when we sell deals like this, if people want to buy. All right. Okay. These are asset highlights, numbers, etc. I'm going to show you that on the detailed Excel. But this is essentially, it's a 3+3 conversion. If there's no questions, I'm going to jump back into here. Okay, so as you can see, this is a purchase price. You qualify for 20% down. Okay, so here's your first loan. Here's your renovation holding costs. We budget renovation and holding. When we run our model, if we were to do it ourselves, it's under $127,000. All right, and estimated repair value conservatively $630. And based on this, you get the new mortgage. You can see now the short-term capital needed is before your conversion is completed. How much money do you need? That includes your down pay plus your renovation holding costs, right? So under 300. So this one is just under $250,000. Long-term financing means after a year or so, or within a year, once you've finished your renovation and you finish your conversion, you went to the bank, you reappraise, and you get the new mortgage down, you got the money back. How much money did you get back? You get back 112. All right. So roughly the construction. So typically we get the roughly renovation back. So you only have 150 or so left in the house, but you actually got a $630 worth of real estate asset. And your monthly rent income is $3,200, roughly. Got it? So that means after a few months, once you've done your renovation, you've done your conversion, you only have 150 in the house. And you can take the money that the bank gave you, which is 112, go buy something else. All right? Okay, this is the monthly statement, I guess. You can see annual, you can see monthly, taxes, property, all of this, based on our experience, we're pretty sure about the forecast here. Your rent, positive, negative, you're getting a roughly neutral cash flow position. All right, now, this is how we calculate return. Assume 5-year natural appreciation. The reason why is because from the 80s in Canada, yearly natural appreciation average is 5.5%. Therefore, we use the 5%. All right, so at the end, if you were to exit on year 5, this is your total money back, and this is your money invested. Therefore, the first model, we do profit sharing. That means once you get the money and you got your initial capital paid out, 153, then we split the profit in the end, 5 years later, 60-40. And based on your 60 share, average out per year, you are getting a 16% return on this project. All right. Any questions here?
Nope.
Okay. Next one. This is the second model I talked about. Everything is the same here, except for that you're simply buying this project from us and you don't have to pay us a cent, except for the finder's fee. And you manage everything yourself because we're not doing the work. Everything's the same. In the end, you don't have to do profit split. You're looking at, if you were to exit 5 years later, every year you're looking at roughly 27% return. Any questions here? So for people who have done a few, they always tried this model. But the first few if you are not experienced, we don't suggest that you do it yourself. It all depends on how willing you're trying to you're trying to work, right? Any questions here? This is the bulk of. Oh, before I move on to next slide, which we're going to talk about marketing in general. I'm more. This is all the specific relevant content to conversion. So one thing I forgot to mention is that before, if we JV, like if we manage everything with investors or with our clients, we don't, like all the money coming back first goes to the client first until the capital principal, like here and here, is fully paid, and then the profit is shared. All right. Okay, so up to this slide is all relevant conversion specific content. If there's no questions, I'm gonna jump into what we see on the market in general in Toronto for COVID-19. All right, okay. Actually, this is becoming really interesting. We specifically put Oshawa just because right now, like we're buying a lot in Oshawa, so we thought we give you this. You guys can figure out the Toronto one yourself. So all the indicators are going up, surpassing 2019. And we see that on the forefront as well as if it's a convertible asset that we find we are actually beating against a lot of investors from Toronto. That's the case in 2019, and that's the case even during COVID-19. All right. Units sold went up, especially the average sold price is going up. Okay. New listings are going up a little bit, but average days on market is definitely going down. All right. Rent price. It did dip a little bit. Now it's in full force. Okay, so also based on our construction, we have about 8 construction sites in work right now. The city, the approved permit from city is finally going back to normal a little bit. Rent, Toronto condos are seeing a dip. However, under our portfolio in our investment products, like the conversions, multifamily, etc., we're not seeing a dip. We're still seeing same level or higher. However, the banks have started changing the rules on their mortgage lending, on their refinances. So if you are thinking about refinance or thinking about doing some creative debt structuring with the bank, be careful right now, okay? Also, as you can recall, we have another, lending business which we lend on real estate. We are hoping that we can get a lot of distressed properties to acquire. Unfortunately, we have not seen a wide and big discount on single houses or real estate in general. All right, we are direct lenders and we haven't seen that. So, if you have seen some distressed properties way below market discounts, say 20 or 30%, lucky you. So far, we have seen the most is general premium is about 10%. For houses that are really hot right now, and for discounts that we see typically range between 5 to 10%, which is very small in our mind. All right, we were hoping 20 to 30%, but that's not here yet, and we don't know if that's gonna ever be here. All right, for houses or for investment property that we put our eye on, we lay our eyes on, everybody else is as well, and they since in November, the ones we have acquired has already gone up 10%. All right. Construction-wise, contractor-wise, finally they're back to work. Normal hours, sometimes they're extended a little bit. However, some construction material, they take longer than usually to order. So sometimes now you're looking at your shortage of labor, or maybe your construction phase is prolonged a little bit. Okay, according to our experience, how long does it take to get a permit now? It really depends on the city right now. In Oshawa right now, we are looking at only a few weeks. Brantford, we did under less than 14 days. In Hamilton, it takes forever right now. So it really depends city by city. Okay, whew, I did fly through. I hope I touched everything that you guys want to know. Any questions, any relevant specific questions that you guys want to ask? And I did hope you enjoyed the content I shared with you today and learned something. While you're doing the questions, you can fill a survey, which will help us to put more topic in front of you in the future, whatever you want to learn.
Thanks for sharing today, Sandy. I have just, I just started a poll to collect all your feedbacks about the seminars today, and also for your willing of next time as well. So if possible, can you please select your answers about the 2 questions in the poll? Well, you can pull it from one option at the bottom of your screen, which name as vote. So, okay, so I will see there. Yeah, I have seen one answer, and just wait for the following ones. Okay, we will give 2 minutes for you guys to finish it. Meanwhile, if you have any questions, you can, okay, so Cindy, there's one question just jumped up. Cindy, can you hear me?
Yep.
Okay, great. Someone wants to know more about MIC and legal lending.
Sure. Yeah, absolutely. Okay. MIC is a mortgage investment corporation. Our MIC right now has been in operation for a couple of years. Our LTV means risk ratio, like debt to ratio. Typically on the market, MIC LTV is around like 80%, 75%. Our MIC is actually at 61%, so super, super low risk. And we have been paying people 8 or 9% every month. Every month you're getting the money. Sorry, 8 to 9% it's yearly, but you're getting the check every month. And you can enter exit anytime. You can use RSP. You can use your tax-free money. The moment the money went into our accounts, you start earn interest and you will start getting paid. I don't know if that answers the question. We can also follow up with the material. It's very simple. You can you take a look, read it, sign it, send the money, and it's done. Money starts working for you. Legal lending is where we lend money to a lawyer who represents plaintiff in motor vehicle accidents, which needs living expense before the court awards the payout. It's guaranteed by 2 things. 1, lawyer personal guarantee. 2, there's an insurance segment called after event insurance. This law firm is the top 3 in Canada. So they have a firm-wide policy because the insurance company usually, go after these large law firms. So the after event insurance also guarantees the payout of all the plaintiff files. So you got double guarantee on the legal lending. Legal lending payout is 10% per year. We accept money once a month, and you get the interest up front. So for example, if you wanna subscribe, say like 100K, and the interest per year is 10K, you only need to wire over 90K because you can deduct the interest directly up front. All right? I don't know if that explains well. So MIC, LTV 61%, super low. We're giving 8 to 9%, also a bit higher than what market usually gives. And our LTV is definitely lower than what market typically has. And the legal lending, not a lot of people know about it. We do it ourselves because we know the law firm and we know the lawyer really well. And we ourselves invest a lot of money in there too. Oh, one thing I forgot to say. So legal lending turns typically 12 months, and you can choose to renew or not. MIC, we prefer you to stay for more than a year because the mortgage term is typically 12 months. So. Okay, any other questions?
So far not. I just saw people are still interested in other products of ours. So I have received all the answers about the survey. Thank you for participating today. And we are ending up this webinar, this time's webinar now. Meanwhile, if you want to see, watch the playback of this webinar, you can also follow us on the YouTube, which I will send the link to you guys after this webinar. So thank you again for participating, and
we will also host webinars on like other product like the MIC, legal lending, etc. So because we got questions on that a lot as well. So just watch out.
Okay, cool. Thank you.
Thanks, everyone.
Bye.